exports to so the export markets, large export markets have been under pressure. We'll try and get more from the management in a bit. Our market master of the day is Gautam Shah, founder and chief strategist at Goldilocks Premium Research. Gautam, great to have you with us here on the program. Thank you very much. Within sort of kissing distance of a new all-time high, Gautam, and you know, beyond then it is you know, blue skies and uncharted waters in that sense. Just what, 3.5% away. How soon do we get there, or do you think before that, you know, one would have to wait a little bit, some consolidation possible? What's your sense?
Good morning, Prashant. Well, this kissing distance hasn't been going so well for the last 6 months because we've attempted to get past this 18,000, 18,100 area multiple times, but we've always found some resistance. In fact, the market has topped out around this level a couple of times this year. However, I think I want to take you back to a month back because when the world markets were in very, very bad shape, you know, there were two scenarios. Scenario number one, wherein India fell and moved in sync with the rest of the world equities, I mean. And scenario two was the world bottomed out and got back and got in sync with India. I think the latter has played out beautifully in the last 2.5 weeks, given the kind of recovery that US markets have seen, some of the Asian indices have seen from the lows. And I think Indian markets at this point, you know, the fact that since there are no topping out signs, the leadership has returned, VIX has collapsed, seasonally we are in a very positive period, banks have started to do well. I think there are just too many factors which suggest that this attempt should take the Nifty past 18,100, which has been the big resistance. And once that gets confirmed on a closing basis, we should see new lifetime highs past 18,600. So I would remain bullish. And if you really go by the breadth data, the market is nowhere close to being overbought because the mid caps and small caps haven't really participated in the last 2 weeks. It's really been the large caps led by what's happened, you know, in world equities. So I would remain bullish, stay invested, and use all dips to top up.
Okay, remain bullish, stay invested, and top up on every dip. Gautam, if you're bullish on this market, right, what are the kind of stocks that you see could outperform? If this October rally has more legs, then where does the leadership emerge from?
Well, the leadership is returning on an overall basis, you know, which is good to see because 6 weeks back, the problem was nothing was doing well. You know, Reliance was in a difficult space. IT index was not doing well. Banks had seen a very large correction from 41,000. And now all the three major pockets of the Nifty have come back strongly. But clearly, it's all about the banks. I think the kind of outperformance that it's seen in the recent past and the fact that it's just 1.5% away from lifetime high tells me that banks are going to lead the way even from here. So our working target near term would be about 41,800, which was the previous high. I think in this attempt, we will get past that number. And once that confirmation comes, we should see 43,000 to 43,500. Apart from the usual poster boys, which is ICICI Bank and SBI and maybe a Canara and BOB, I think some of the other underperformers are also attempting a comeback. So I would still be very, very positive on banks, followed by autos and capital goods.
Hi, Gautam. Morning. What about the metals pack? You know, index has been a big underperformer. Things are rather gloomy. You believe there's more downside here?
I'm not sure whether there's more downside, but I'm definitely sure that there's a lot more underperformance because any index which doesn't participate while the Nifty goes up 1,200 points is clearly a red flag. And there is just too much happening globally. And it just seems as if the smart money, you know, has moved from this sector to some of the other sectors in the market, which is quite visible if you do ratio analysis on many sectors. So metals is a complete avoid. I think it's probably the only sector in the market which does not have a good setup. Everything else, rock solid.
Just a few names which are in the mix. So Nykaa has cooled off a little bit. If you can pull these up quickly, it's up 2.7. It was up 5 when we started. Apollo, so we highlighted Max Health, but Apollo Hospitals is another one which has joined the ranks along with Max Health from the hospital space. That's up another that's up 2.5 now. And sort of in that same space, the Path Lab companies, Metropolis is up 3% on decent volumes for this time of the day, and Lal Path Labs is up about 3.25% as well. So these are new additions which one is seeing. Another new age kind of company which got smashed is Delivery. Delivery is up 6%, 364 on delivery coming in at this point in time. Gautam, the one space which has done very, very well, very strong momentum is the PSU Bank space. You know, in the last, 4 or 5 days, look at names like CanBank, Bank of Baroda, Bank of India. Is that a space you would like to trade based on momentum, pure momentum?
Prashant, for the last 6 to 8 months, I've been batting very strongly for the entire PSU basket. I've been saying that there is a structural change that has happened. The sector has seen a lot of relative strength in the recent market weakness. PSU stocks stood out beautifully, and now they have come back very strongly. So we like the entire basket itself, and I think the index can appreciate anywhere between 15 to 20% quite easily, led by Coal India, which is our favorite. But if you look at the PSU banking space, what is interesting is that we've seen a massive breakout versus the Nifty, versus the Bank Nifty, and versus the private bank index. In fact, we are putting out all of these details in our big picture report, and we feel that this is again a structural change. And because they have been under-owned for so long, the room for upside is substantial. SBI clearly remains a favorite. I think it can do much bigger things going forward. And the other names that you alluded to, Canara Bank and BOB, also have potential. But I wouldn't go very speculative. I wouldn't go to the smaller two-digit names. I don't think they have so much potential.
What about autos, Gautam? Because over there's a K-shaped recovery, right, as we call it. I mean, on one hand, the premium domestic market is doing very well, whether it's M&M, whether it's Royal Enfield. But on the other hand, the export market continues to get hit. The rural market has not recovered in entirety. From a technical standpoint, what are the stocks that you still like?
Well, Sonia, since you track the auto index so closely, you would know that, the breakout really happened above the level of 12,000, on the auto index. That was the number which was a resistance for almost 2.5 years. Once that level got cleared, it just opened up blue skies for the index. And thereafter, there hasn't been any stopping it. But as you rightly pointed out, you had to work hard for returns because a Hero, a Bajaj, a Tata Motors haven't done well, whereas an Eicher Motors, a Maruti, and an M&M have done beautifully, even an Ashok Leyland. And I think there is a lot more potential for this set of stocks, along with Tata Motors, which is my favorite pick among the underperformers of the recent past. So I think on an index level, our working target is 13,800. And over the medium term, we are looking at about 15,000 for the auto index. So I think this is a trend, which is here to stay. Again, they have underperformed for a very long period of time. So I don't think the outperformance is going to end very quickly.
Okay. What else? What else is on your radar, Gautam? I mean, as trades, both on the long and the short side, if there are any on the short side.
Prashant, on the long side, I think we continue to like capital goods and real estate. I think capital goods will do wonders over the next 1 year. It has been my top pick this year. And I see that index appreciating 20%. I know we are talking about L&T results, but I remain extremely bullish on L&T, and I feel it's going to be one of the best performers in the sector, in the index over the next 1 year. And let's not forget real estate, where I think likes of DLF, Oberoi Realty, Brigade, Prestige, all setting up well for large upside. And let's also not forget the mid caps and small caps. I think going forward, the next couple of quarters is going to belong to that segment, because the Nifty is an elephant. It will not be in a position to run very hard. But mid caps and small caps, after the recent consolidation, are setting up beautifully. And I think the momentum is coming in there.
All right, Gautam, I wanted to know about the IT index or the IT stocks. Everyone was saying gloom and doom, valuation-wise, they're very, very expensive. Some of the commentary that came out from some of these big managers a little bit mixed as well. But the index, to be fair, if I look at it from the end of September, it's given you returns of about 9-10% odd. It's seen a phenomenal bounce actually. What's your take on this one? Towards the end, it did start perking up. Your take?
Well, Nigel, generally people don't participate when this initial 9-10% move comes, because as you rightly said, there was a lot of gloom and there was so much projection on the downside. But the fact that it did not fall and it just stayed in a range for the last 8 weeks was a win for me. And I think now with the IT index sustaining above 28,500, I'm of the view that it is one of the better risk reward opportunities in the current market. The only problem is, these global factors, which are just too fluid at this point of time and can impact IT. But nevertheless, I think if you are in the big four and if you are in some of the other names like a Persistent or a Coforge or a Happiest Minds, which we like from a medium-term standpoint, I think there is a lot of money to be made. So IT, we like as a basket. It might not be momentum right now, but it's definitely an investing opportunity.
So you started the discussion by saying that there is some resistance around this 18,000, 18,100 mark, right? But you're still quite optimistic on India, at least on the Indian market. So what makes you circumspect around these levels? And what would your targets be? Say if you're looking 1 year out, same time next year, where do you see the Nifty?
Well, I'm not too circumspect, Sonia. I think it's just that in the last 1 year, we've had the Nifty correct from 18,100 many times. And therefore, just about every market participant will be watching that number. I just feel that there is enough evidence on the table to suggest that this time we will clear that. And once we clear that, there is no stopping till about 18,600. But if you have to really look at the bigger picture and India's outperformance in the world, I think my upside working target is 20,400. It might sound like a very big number, but in percentage terms, it's nothing special. And that's probably the reason I think this is a bottom-up market where you have to commit into mid caps and small caps.
All right, Gautam, thank you very much. It's a pleasure. Appreciate you joining in with